So today was February 13, the day before CPI. Started off today trading only 20 shares of the QQQ, following the plan from last week as I had somewhat of a losing streak. I decided to reduce the risk and build up more reps for the strategy. I only made two trades today, and I will show you how they turned out, and what was my thought process going into them, and also how they looked on the charts. So let's get into it. So the first trade was at 1017 on the QQQ. And my thought process going into that was looking at the dollar. The dollar was coming down to a daily support level. However, it did not reject at that level. It just kept pushing down. And you can see it here. So on the dollar, as the dollar kept pushing down, that's what kept the market going up. So when I went to the sell side on the QQQ, I was hit out at my stop loss within around 15 minutes. But I'll show you where I entered and where I got hit at my stop loss on the QQQ. So I entered on the 1015 candle and it was at 30181. So at 30181, okay. So I entered at 30181, and then as the market continued to go up, I got hit out at my stop loss on the 1035 candle at 30263. 30263. Okay. So on the charts, it looked like the dollar was going to reject, but the dollar kept drilling down. And as the dollar kept drilling down, the QQQ continued to run up. So this was my first trade of the day. With the lower risk, I could only lose a max of like $20 on the day. So I lost around $17 on that trade and called it good. On the second trade is where it seemed like the market kind of found a top. So I found a top in the market and sold it from there. However, because I wasn't paying attention to the trade and the trade didn't push down all the way to my take profit, which was around at 302. So I had a take profit at 302. The market only pushed back down to around 303. So I wasn't able to take that profit, but I only ended up with a loss of around 15 cents. So I entered at 214. So that would be on the 210 candle. So on the 210 candle here, I entered at 30425. 30425 on the 310 candle. 210 candle actually. 210. So I entered at 30425 to the downside. So 30425 right here. Okay. And then the market traded until the actual broker closed me out of this trade at the end of the day. Actually for a profit of $1.35, but I could have taken more profit if I had closed it as it came down to 303. But because I was busy during the day and it didn't come down to my exact point of a take profit, that's why I only took that small amount of profit. And then because of the broker fees, it ended up being a negative in total. But I got closed out at, what's this, 355 at 30406. So on the 355 candle, I got closed out at 304.06. So right about there. So this is where I entered to the downside, and this is where I got closed out by the broker. And as you can see, I could have taken much more profit if I closed it at, say, 245, 250. But I wasn't paying attention to it like that. And I had expected it to come a little bit closer to my take profit, like 302. But it didn't reverse that far. But I'm just learning a bit more. So something that I don't really like to do is trade like the news, because the last CPI or the last Fed day really destroyed me. So trading on some of the news, the candles are so big, the moves are so big, especially going up to the news. There's like such low liquidity that more institutional players can kind of knock you out of your take profit, knock you out of your stop loss. They can just kind of manipulate the market in a way, especially when nobody's trading until the exact news comes out. And then when the exact news comes out, that's when you have people kind of interpreting it, and the robots are reading it, like the algorithms are reading the news, making trades off of that. And the candles are so big that if you're wrong, you're definitely going to pay for it, right? So we're gonna look at Market Watch article where they have like a early look at what Tuesday's inflation data might be meaning to investors. So you know that the Federal Reserve determines their interest rates off of CPI. So if the CPI keeps going up, then the Federal Reserve might keep raising interest rates. However, we're at a point where the Federal Reserve might not raise interest rates much further. It's like we've reached a peak where they're saying they didn't plan to go much higher than that. So even if CPI still continues to trend up, I don't think the Federal Reserve has much plans to keep tightening financial conditions. So here's an article from Jeffrey Bartash where he says what economics expect to learn from Tuesday's CPI reading. The consumer price index is forecast to climb 0.4% in January. So they're expecting the CPI to continue going up. However, in the previous meeting, Jerome Powell did not like intend to raise interest rates much higher. They're even slowing the pace of interest rates by going like 0.25, 0.25 versus the previous meetings where they were doing zero point 0.5 hikes and 0.75 hikes, right? So a higher than expected CPI increase would set off alarms and suggest inflation might be stickier than previously believed. So we can be in a place where we have high inflation and then you have high interest rates. So it can be a place where like everything stays expensive, and even the money that's coming from the Federal Reserve stays expensive as well. So the Fed and Wall Street investors want more evidence inflation is cooling. When you have cooling inflation, that's when the Federal Reserve can kind of slow the rate hike and even cut and make financial conditions more easier for people to participate. You can have like cheaper loans, cheaper debt, right? So let's see. I wanted to also show you the trading economics interest rate chart, and you can see that this interest rate hike is probably the fastest in, let's see, the last time interest rates has went up this fast would have been in 2004 or 2005. That's the last time we've had this fast an interest rate hike. So we might see a plateau just like what we had in '08, where it's like interest rates are so high for so long that basically a lot of businesses get squeezed, a lot of real estate gets squeezed, and a lot of people go bankrupt before they actually start to reduce the interest rates, and that's kind of look like what we're trailing to now versus 2016 where they had a gradual rate hike, gradual up until around 2019. And then we know what happened during COVID where they wanted to spur growth and keep the economy going, so they cut interest rates very fast in COVID. So we're seeing a quick interest rate hike now within these, I would say, 1 year. We've raised interest rates up by 5%, and we're probably planning to stick at 5%, especially if inflation doesn't start to go down. So let's see what CPI comes in at tomorrow, and most people are predicting it to be a sell the news event. So if CPI is high, if the CPI is high, the Federal Reserve is going to keep interest rates high for longer. And it would be even worse if they came out with a zero point 0.5 basis point rate hike at the next meeting, because that would mean that they would continue the rate hikes and the tight financial conditions would just stay around longer, and that would make loans like more expensive for the long term. That would make people, businesses would go bankrupt. People would not really want to take out loans, credit cards, car notes, start businesses, all of that. Well, let's see what happens tomorrow. What from the chart it's showing us the dollar is breaking down on the chart, yes, but it might just be breaking down to a level where it could bounce up. But you know that during these news events, the dollar can move completely independently, and we'll see what the QQQ does as well. The next level for the QQQ is 306.06. So this is a big resistance level for the QQQ, and we can either break above this or not even get to it and just keep pushing down, drilling until 29945 and then 298.17 after that. Let's see what happens. You can see why I reduced the risk today, because I can actually follow my strategy more and there's less pressure versus when I'm trading 100 shares and there's like pressure to do this, pressure to do that. If I'm trading less shares and I can just build the strategy a bit more before applying the 100 shares again. So let's see how that goes, and I'll see you in tomorrow's video.